everyone, welcome to our super exciting journey into the world of investment.
Today, we are diving into the core principles of investment, from basic concept, investment instrument, risk factors, and the investment ecosystem.
It's going to be fun,
Engaging,
and definitely insightful.
Investment means putting your money into assets for a certain time to earn returns. People invest to generate income, grow their capital, or simply preserve their money. Next, let's talk about risk and return. There are a different relationship between risk and return. The higher the risk, the higher the potential return. And vice versa. For example, government bonds are low risk with steady return, while stocks carry higher risk but can offer greater rewards. When investing, focus on financial goals such as protecting your principal, achieving financial independence through steady income, guarding against inflation, keeping investments liquid for easy access, and diversifying your portfolio to reduce risk.
Now that we know what investments is, let's talk about type of investments. We've got two main categories, real assets and financial assets. Let's break them down.
Firstly, let's get to know what real assets are. A real asset is tangible physical object with worth that can be possessed or utilized to make money. For example, real estate include assets like homes, buildings, and land that are for sale or rental. Second, commodities such as gold are valued natural resources that are exchangeable. Thirdly, businesses employ machinery and equipment as tools to make products. To put it simply, real estate is something that is valuable and tangible. People purchase it in order to protect or expand their money.
Next up, we have financial assets. These are investments that are tangible but are still valuable. First, securities. These investments represent ownership or debt, including bonds, preferred stock, common stock, and T-bills. Second, savings, a deposit in a bank or financial institution, offering low interest with minimal risk and high liquidity. And last, unit trust fund, a pool investment fund that allows investors to diversify their portfolio by investing in various assets. Financial assets are more liquid than real assets, but they can be subject to market fluctuations and require careful management.
Now that we understand the financial assets, let's talk about the risk involved in investing.
Market risk means the value of your investment can go up or down based on the economy. For example, during the financial crisis, your investment could lose value. Inflation risk is when rising prices reduce the purchasing power of your money. If your investment doesn't grow enough, you lose money and you lose. Credit risk happens with bonds. If the issuer can pay back, you lose your money. And interest rate risk affects bonds. When interest rates rise, the value of your existing bonds falls because newer bonds offer higher returns. Understanding this risk helps you make smarter investment choices.
Last but not least, we'll dive into investment ecosystem.
A financial market is a platform where financial assets are traded. An example of a financial market is stock exchange, which provides platform for companies to sell their financial securities. Many regulatory bodies in Malaysia that aims to maintain target integrity, such as these. Securities Commission is a government agency responsible for regulating capital market activities. Investment banks act as mediators in financial activities between companies and investors. Bursa Malaysia regulates the Malaysian capital market and ensure that the trading market is secure and efficient.
Investment intermediaries act as middlemen between two parties to facilitate investment activities. An entity that arranges transactions between buyer and seller is known as a broker. The role of fund managers is to manage investment funds on behalf of the clients. Wholesalers distribute goods from services and services from producers to retailers.